Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today is Wednesday, January 14th. Not a good day at the OK Corral. The Dow breached that key area that I didn't want breached. It did it early this morning. I mentioned in my blog right away. And it also pulled all the way down to the deal-breaking support area. Now, it didn't breach it, and it sort of like bounced off it just a little bit. But I need to tell you that this pullback has now turned into something that looks much more threatening than it originally did 2 days ago. So the strategy is caution. We will commit no new funds, long or short, right now. And the reason for that is because even though as ugly as they look, there's still a possibility that the market could dig in here and climb back out of here. Each day it's looking less and less likely. It's probably just a 50-50 chance, and I certainly wouldn't bet the ranch on this. As a matter of fact, we're not going to bet anything on it. We're going to sit on our hands and watch for a few days to see if the market is able to hold these levels, or if it breaks significantly, then I'm going to be forced to turn somewhat negative and change my approach. But as of right now, fingertip holding. We're holding on by our fingertips. We'll take a look at all the major indexes. I'll show you where we're at and once again what has to happen. But the market clearly was back into the old, throwing them out the window again syndrome today. Now we're down 6 days in a row. We're down over 700 points. Everything I look at is oversold technically. So, somewhere along the line, I would think technically there should be a bounce, but we'll see. Like I said, if that key area in the Dow, which I'll point out to you later, gets violated substantially, I don't mean by 20 or 30 points, I mean by 100, 150 points, and we close down below it, the whole picture is going to change. There could be another leg on the downside. I don't know. But like I said, there's a 50-50 chance that things could dig in here, but like I said, we're not going to bet the ranch on it. So no new highlighting of any new stocks today, long or short, and we're going to watch for a few days till we see if the picture can hold on or if things get worse. So without further ado, let's go take a look at the major indexes. Okay, this is a daily bar chart of the Dow Jones, and today's action in the Dow right here violated that support area that I did not want to see violated. So I take that as a warning. Now you can also see it got down as low as the deal breaker support area. Why this is the deal breaker is because this is the neckline of this whole pattern down here. And if it were to violate it, and I don't mean by 20 or 30 points, I mean by 100 or so, and it actually closes down somewhere down in here, the whole picture is changed, and it's going to take on a negative look. Now, it's already gotten sloppy because of the fact that this low got taken out. There's a 50-50 chance we could dig in here. You may seem to think it may take a miracle after the intensity of today's selling, and if that same kind of selling happens tomorrow, chances are we will break this low. But as of right now, we're going to wait. My strategy is we're going to do nothing until we get a clearer definition as to whether we're going to break this or if we're going to dig in here. So that's our strategy. We're going to sit on our hands and watch for a few more days. Now, we're down 6 days in a row. Everything I look at is oversold. Wouldn't surprise me to get some sort of kickback rally going. So, but we'll just have to, we'll have to wait and see. But clearly, there's some technical damage done today. The deal breaker hasn't happened yet, but clearly there's a caution sign up. Let's go take a look at some of the other indexes. Okay, the transportation average. violated the old low by a schmittens. Not enough for me to say that the pattern has changed, but certainly a warning sign. So clearly there's some warning signs around, so we're going to take on a cautious stand here. Okay, here we have the Russell 2000. Now the Russell 2000 is not quite as threatening. There's more wiggle room on the downside. Of course, that first support area got violated. And our next one is here. We've got a few layers here, and then of course here. But we lost our ascending triangle look. So that's the warning right there. Not only did we break this low, but we broke the trend line. So caution signs are up. It may be able to salvage itself, but we can't bet on that right now. And lastly, the QQQQs, the top 100 NASDAQ stocks, actually did not violate that low. But you would think with the Dow doing it, it would not be a surprise if this were to break tomorrow. And this, of course, is our key support area that we don't want to see broken. So like I said, there's still a chance that the market could dig in. We have to sit and wait. But caution signs are up all over the place. So we're going to commit no new funds, long or short, until we get a clearer direction. Okay, that's how I see it. Until tomorrow, this is TK signing off.